Do you think that the election timing will factor into the Fed's thinking? I mean, of course, they're supposed to be apolitical, they're supposed to be completely independent, but we know, of course, that nothing happens in a bubble. Do you think that the Fed may alter the course of what it intends to do based on the election?
No, I think at this point, the Fed, the fact that they haven't hiked rates in first quarter, remember in April, we were sort of at peak, next move is a hike narrative. That's why we had a little bit of a correction. Because it looked like data was really strong. It didn't really justify a pivot towards cuts. And so the market got a little bit afraid of a potential reversal of the December pivot towards hikes. Now, the Fed ignored that, ignored the strength of the economy and stickiness of inflation in Q1, and has been rewarded with some weak data. So I think at this point, they're on autopilot, and they have plenty of evidence, finally, to cut rates in September. So I don't think that the election is going to move them away from that cut. But the issue, the uncomfortable issue, is that what happens if President Trump's probability does rise following this debate or following the next debate, following the conventions? At that point, I think the biggest takeaway for investors is that the market is not going to price in President Trump's pro-business policies or supply-side reform or tax cuts. I think that the bond market is likely going to have to start pricing in fiscal profligacy and greater budget deficits under a President Trump presidency. And I think that that would be the biggest risk to the equity market. You know, if the 10-year yield starts moving higher, opposite of where the macro context is, which is weaker growth.
Marko, which candidate would be good for the dollar?
I think Donald Trump is likely going to be agnostic for the dollar. And I think that Donald Trump would be perfectly fine if the dollar decelerated and depreciated. Now, that's not necessarily the view of the Wall Street sort of community, because there's a perception that President Trump was very positive for the dollar in 2018 due to his tariff policies. I think this is a fallacy. I think if you look at what actually happened in 2018, the cause of the dollar appreciation was not the tariffs, was not the trade war. It was the fact that global growth was decelerating while U.S. growth was accelerating. So global growth differentials favored the dollar. So overall, I would say that Joe Biden, just kind of by default, would be better for the dollar. I think President Trump will likely be either, flat to potentially pretty negative for the greenback.